in the Price Action Roadmap video. This is our fourth video in the Price Action Roadmap series. Previously, we covered the hammer, bullish engulfing, and shooting star patterns. Today, we will follow the same roadmap and dive into the evening star candlestick pattern under basic price action. Before we start the video, if we hit 1K subscribers, I'll release an FVG strategy video, which is part of the SMC trading strategy series. Let's first understand how the evening star pattern works. This pattern primarily consists of 3 candles: a strong bullish candle, followed by an indecision candle, and then a bearish candle. When the market is in a short-term uptrend and the price reaches a nearby resistance level, buyers push the price upward, closing a strong green bullish candle near the resistance area. The opening of the next candle is above the previous candle's closing, and the price initially continues the trend. However, the buyers who bought at lower levels have already made some profit due to this bullish move and don't want to lose it. So, as the price nears the resistance level, these buyers slowly exit their positions, preventing the price from rising much further. At the same time, sellers see the resistance level and create selling positions, leading to the formation of an indecision candle on the chart. An indecision candle forms when both sellers and buyers are unsure of their next moves, or their strengths are equally matched. When you see such a candle on the chart, it's an indication of market uncertainty. New buyers don't enter at this level, and the existing buyers start booking profits called long unwinding, causing the price to gradually decline. Sellers become more active and create a bearish candle on the chart. If the red candle closes slightly below the 50% area of the previous green candle, or below its opening, it signals increasing seller strength. The larger the red candle, the stronger the sellers are in the market. Remember this pro tip: when analyzing candlestick patterns, don't just focus on the color of the candle, whether it's red or green. Instead, understand the mindset and psychology behind it, because the color reflects the mood and emotions of buyers and sellers and their current interests in the market. Now let's look at the psychology behind this pattern. Buyers who purchased at lower levels have made good profits due to the upward price movement. So when the price reaches the resistance level, some of these buyers start booking profits, while others hold their positions, hoping the market will go even higher. However, as the price faces rejection at higher levels, the buyers who are already in profit become afraid and start exiting their positions. This increases selling pressure near the resistance level. Seeing the buyers exit, sellers also begin entering short positions, causing the price to drop further and the previous uptrend to likely reverse into a downtrend. At this point, sellers capitalize on the emotions of the buyers, pushing the price down further. In this way, both buyers and sellers take advantage of each other's emotions in the market. Let's now look at some chart examples. In this chart, the market formed a strong uptrend with higher lows. Some buyers, having made profits from this upward move, started booking their profits in higher levels, which can be seen as a long unwinding on the chart. However, some buyers held their positions, but as the price approached the previous resistance level formed on the chart, along with an indecision candle, forming the evening star pattern. This indicated that buyers was no longer interested in pushing the price higher, where sellers increased selling pressure and pushed the price down. Here, stop-loss hunting also plays a role in pushing the market lower. Market traded in an uptrend, with many buyers expecting the trend to continue the uptrend and placing their stop-losses at different levels, which they viewed as a support level. In an uptrend market, only profit booking occurred, so very few sellers entered at this point. As a result, fewer stop-losses were placed above the market compared to below. According to the smart money concept, big institutional traders need liquidity to execute their large orders, and retail. Most stop-losses are placed at lower levels, meaning the majority of liquidity is there. To capture this liquidity, large traders increase selling pressure, triggering retail stop-losses and causing T. After we finish this series on price action basics, we will delve into stop-loss hunting in advanced price action. So for now, there's no need to worry about this concept, as it belongs to advanced price action. Let's now move on to the next example. There was strong selling, but the market found support at lower levels and started moving up slightly. At this level, it faced resistance from the previous swing low and formed the evening star pattern on the chart. Additionally, if you place the Fibonacci indicator on the chart, you'll notice the price being rejected from this. As long as the price stays below 0.5, there's a strong possibility of the bearish trend continuing. Placing your stop loss slightly above this swing high allows you to enter a short trade since you have 3 confirmations: the resistance line, rejection from the Fibonacci indicator, and evening star pattern. After some time, the price moves down, indicating that the evening star pattern acted as a trend continuation signal. Now let's summarize a few key points. Point 1. The second candle in the evening star pattern can be red or green. The color doesn't matter much. Point 2. If the second candle has a long upper wick, it indicates strong rejection at higher levels. Point 3. If the third candle closes below the opening of the first green candle, it signals strong selling pressure. Point 4. Don't enter a short trade based on an evening star pattern alone in a strong uptrend, as a single candlestick pattern cannot reverse a strong market trend. Point 5. You can use this pattern in any time frame, but its accuracy increases with larger time frames. I encourage all traders to practice these concepts on the charts as much as possible to understand them better. If you found this video helpful, please like it and subscribe to Trader D.